Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 7th of December 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Back refreshed after a week's break. I want to talk a bit about what I do today, strategies, breakouts, trends and momentum capture. That's our game, that's our strategy, that's what we do, that's what we focus on. So I've got 5 hot prospects for you today to have a look at. I'll go through later on with a couple of other stocks. So these stocks are not necessarily buys, but we're monitoring them for breakouts, for the signal to go for it. The properties are building, but not yet triggered yet, so we have to wait a little bit longer. But if the market moves higher, these stocks are likely to take out some key levels, so that's why I want to bring your attention to them now. Remember, we cover only stocks in the top 200, and that is really a risk management thing that I do. If I'm down the scale, it gets a little bit riskier, and I don't want to be too risky for you guys because a lot of you manage your own superannuation funds, and you want to be very careful with your money. So that's important. And also our 5-stock portfolios have now all swung to 5 out of 5. We've had a strong market the last few weeks, especially overseas. So we're going to have a little bit of a look at our market, their market, and see what goes on at the moment. Trading tactics this week. I want to talk a little bit about Charlie Munger, who passed this week, a little bit about how he looks at things. And it is quite interesting when we talk about the big Omaha meeting every year. So we'll have a little look at that. But firstly, what I want to get into is the overseas indices. Okay, so first we look at the Dow, and we can see there it's been a pretty powerful move the last 4 weeks. A little bit of a hold off today, but no real sellings happened yet. We saw a quite good sign here through support in March, and then again sort of in October above those highs, which is very promising. Then we saw a very sharp rally on good volume and good momentum here, pushing it straight towards the highs. So there's a good chance that these highs will break. They don't have to, but we're still in the situation where we're not there yet. But the signs are very good and very strong at the moment. If we look at the S&P and the Nasdaq, they're all pretty similar there. You can see they're not quite there yet, the S&P, but we're still back to that high we were in July, and we're looking very good. And we've got some very good volume there. Momentum's positive. It's above the average, so things are all set and ready for this to make a good challenge on those highs there, and maybe the Dow might go through. Nasdaq itself, again, similar situation. We're back to those highs that we saw back in July of this year, 2023 still. But we've seen a very sharp rally again on good volume, bringing us back up to there again. Momentum's just starting to tick into the positive territory, so R1 is certainly being challenged quite well at the moment. So the whole thing is looking constructive at the moment. Okay, so I'm quite positive about that. Now on the flip side, we go to the commodity sector, and copper and gold both sort of had a good run up and a good turn, and we've had a little bit of a blip this week. They've come back a bit. So copper's trying to turn. It's a bit of a work in progress at the moment. It's made a little bit of progress, breaking that downtrend line and the moving average there. I've got a little bit of volume there, which is good. So whether it takes off just yet, I doubt it, but it's certainly looking like it's trying to turn after a fairly heavy down period over the last 12 months or so. Okay, so that's copper at the moment trying to. Gold has had a breakout and also reversed straight back quickly. We're still holding the R1 level, which is good. So we just have to wait and see. I'd stay positive on this one at the moment to actually get through that level. So I think for gold, it still looks okay at the moment, again, until told otherwise. So I'm happy to hang in there. And you can see the volume down there is very good, and momentum's gathered quite nicely there. So that's all very constructive, and it's above the average. So all the indicators are positive on gold at the moment. So that's a good sign. And the other one now is Brent crude. Now I don't think this chart will have been updated because we're a bit early there, but we saw a good 3 or 4% drop last night. It's failed in its rally. It's back down again. Selling is evident, and S1 is probably the last hope before we see another plunge in the crude price for the moment. So all is probably not on our radar at the moment, and that's fine. There are plenty of other things for us to have a little look at. Okay, so let's go into the ASX 200 now and have a look at that. So our market is not looking too bad. Let me blow this up a little bit for you. Okay. So we've certainly got plenty of work to do to get back towards those highs yet. We've seen some bit of support here, which is quite encouraging, but really not a lot's happened. We saw a very good rally yesterday. But we've got a lot of work to do still to get up through here at this stage. So not quite as optimistic there. So then you really need to focus on those special sectors that we look at and those special stocks that we see are running, and some are running quite well at the moment. So again, the majority of the market is not, but some stocks are. So that's where our focus is. The breakouts, the trends and the momentums, which is what we look for. And there's some good stocks out there. So that's the ASX 200. If we go and have a look at the stock pick count, it's up 3 this week, so we've got 3 new ones in there. It's up to 23 of 184. We've got 18 stock picks of 161. Still not a lot, but we do have 18 stock picks. The great thing is there's plenty that potentially can move in there, and I'm going to look at a few of those today for you. And we've got 5 ETFs, which are mainly indices there, industry-based ETFs there. So that's happening there. I haven't gone through the top 10 yet, but here's the top 10 for you this week. Revel Group's hit the highs. It's been struggling to turn around, but it's looking more constructive these days. You can see the chart here. We've got a bit of volume here. Momentum's positive. It's above the average. It's still trying to work its way out of that big consolidation pattern, but I'd say still with those higher lows there, we can see down there fairly constructive. So other stocks in here, SMR's come back a bit, and EVN yesterday came back as well. We've got to wait for that one a little bit. I still set my stop where it is. I live and breathe by them, so it's important that we watch those sort of things. But we've got stocks like Supercheap Auto, Cochlear, IAG, JXS, MGF all doing very nicely. Remember, stocks don't go one way. They all have their little pullbacks, and some of these stocks are doing it at the moment without breaking down. So don't be too concerned. Don't get too close to the market and watch every little move. Just keep an eye on what the main trend is doing. So that's the top 10 for the moment. And if we go to the portfolios, they've all of a sudden, with our new entries in there, we're starting to get a pick up in the portfolios. All the 5-stock portfolios are full. The conservative is still 3 out of 10. So it's still a bit sluggish there at the moment. And the Energizer 10 stock is 5 out of 10. It has picked up 1. But it's still got 5 to go. That should be 50% equities, 50% cash down there, not 100% equities. But you can see the 5 stocks there. The Energizer stock, 5 stock since inception is 5 out of 5. The Energizer since August 20 is now 5 out of 5. And so you can see how quick we move in and out of the market. A bit unlike the institutions, they sort of can't really move. They just have to wear the prices as they go up and down. We can be fairly quick and move in and out of these stocks. So we're back in there looking full at the moment. And there's some good stocks in some of our portfolios there that are now starting to run on quite well. Okay, so that's the portfolio update for you. The accumulation index is up 8.5. Okay, so now we can go and have a look at some stocks. And last week we looked at some of those stocks like Magellan Global, Prometheus, Aristocrat, which is doing better again, Data, which has been a boomer, JXX is getting back on board. We looked at the other stocks, the AGL, which was struggling and is struggling further again. So we just have to be a little bit careful waiting for that one there. But all in all, the market's been pretty good. Now we're going to focus on a few this week that I put in the hot prospect area for me, and I'm watching very closely. Okay, so firstly, what we're going to go to is Fortescue. Now, we've looked at this one before. We've passed our first test above here. This resistance here, quite strong. And you can see this rally. And you know what iron ore is doing as well. Iron ore has been very, very powerful of late. I think it's up over 130 this week. Today, it was up again last night. But here we've got Fortescue now. It's up on its high there now. All-time highs. Trend intensity rating is +1. Poised and ready to go. It needs to break above R1, which it's done, and R2 to give us a signal. We're getting a bit of volume here without it being outrageous. Momentum is good, so the bias is up. Trend intensity rating is +1. It will kick into positive territory if we break those highs, which would be very, very exciting for me. Okay, the next one I want to look at is the next prospect I think I've got is Seek. Now, Seek's been not doing so well compared to your car sales and your Urea Group for whatever reason, but it is performing a nice little accumulation pattern down here, and we've now seen in the last few weeks, and we've seen a bit of volume in some of these upward kicks, so we're starting to get a little bit of movement at the station here, I think, on Seek. So, but we still, again, we haven't got there. The key level is there at R1. We've got to watch that. We've gone from our downtrend stage into our accumulation phase, and the next stage is the uptrend stage. As to when it starts is always a tricky part, but we look for those levels. We isolate those levels up here where the sellers have overcome the buyers, and when it gets to that level, that's our signal to go. We get a weekly break of a level like that. So when that happens, I can't tell you. but the buyers are nibbling, and this has come back to flat. So it's sort of quite encouraging there. Trend intensity is neutral, poised and ready to go. So Seek is certainly one that could do a bit of catching up against those other two that we know in the internet section there. Okay, new listings, Ventia Services Group. Some of these new listings, as I say, we watch these things in the newsletter because they often form, often when a new stock comes on board, there's a lot of uncertainty as to what the price is, whether it's a good stock, a bad stock, whether it's going to pay yield or not pay yield, but the market sort of settles down and gets comfortable with it at some stage. And for Ventia Services, this is now sort of seemed to happen. We've come off this low at S1, we've formed some high lows here, which is constructive, and now we're getting some good rallies here, and you can see the volume here is quite strong in this rally, which is very good. Momentum is turning positive. It's above the EMA, so this is trend intensity rating +1 is ready to kick into maximum trending zone if this breaks above that level around 306. So it's a new high setup, but again, we have to wait for that to get the signal, but it's looking very constructive for now. So that's a nice new listing, that one there. Okay, the next one I want to look at is Ampol. It's been edging higher and higher and higher, and we can see these old highs up here around about 30. The old high is actually at about $38, so we're just below this at the moment. Trend intensity rating is +2, but it's looking very constructive. We had a very nice uptrend for the last couple of years here. High lows, and we're getting a nice bit of volume in here, which is excellent, and momentum is positive. So this is one of these stocks that is all ready to go. We just need that price trigger, which is the most important part of what I do, to give us a signal to go. So it's ready. Keep an eye on it. That level up there around $38 holds the key to blue sky, but all the other signals are very good and looking constructive. So Ampol, one to watch. Be prepared. Okay, so that's Ampol. The next one I want to look at, again, I've looked at this a few times. It's just been hovering below these lows here, and next DC. It's still sitting there, but it's holding constructively here. We've got a little bit of volume here, which is not that heavy at the moment. Momentum is positive, but not knocking the lights out. It's just we've had this good rally and it's now gone sideways, which put a bit of a dent in the indicators a little bit. The moving average has gone flat. The momentum sort of positive, but not looking fantastic. So we just have to wait for the pricing, because price is key in all these things. Next DC, again, remembering this has now been trading sideways for 2 or 3 years. So it's a very good stock that had a huge rally a long time ago. It's consolidating. It's making some. It's consolidating above higher levels, and I think now we're getting set to make a move higher, especially as this market starts to roll. And that's why I'm sort of pointing out these stocks at the moment, because if this market starts to move again, then people are going to get excited again, and we're going to see some more buying come into this market. So starting to make some good gains in next DC. Okay, now there's a couple of other stocks I want to have a look at, which we've looked at before, but just highlighting the process that we use. Car Group, as it's now called, and I like the way this is now. This is now weathered that storm. The news that Amazon was going to the car sales business sort of knocked things about a little bit there. We saw a bit of selling hit this stock, but it's rebounded well. We've got some good volume here. We had a big volume week here, which is very, very, very positive. Momentum is very high, so that's why it's come back a little bit, but it's been very strong from this push up to here to new highs. Trend intensity rating is 8 for car sales, or for Car Group, I should say. Just having a little bit of a consolidation here, and I love the way this has been held up here, and this volume's come through here. So there is good demand for this stock, and I think there's a very good future for it, having made new highs back in August this year. Okay, so Car Group's looking okay, very good. Prometheus is the other one, which just keeps making good gains. You just got to follow these trends higher with your stop loss, because when you get onto them, you need to make money out of them, because remember, 80% of your profits will come from 20% of your stock. So it's a sort of the 80-20 rule. So that's really, when you get these trends, you really must make sure that you make good money out of them. So it's high highs and high lows defines a trend. It's above the average. Volume is good, and we can see that good volume spike down there like Car Group, and positive momentum down the bottom there. So trend intensity rating for car sales is sitting at 10 and looking excellent. Okay, the other one we looked at before, again, just doing its own thing, doing it very nicely too. It's now hit $12. Ticker data, a nice little turnaround here. We've got some good volume here, good momentum, above the average, just raise your stop on this one. It's looking good. There's really nothing else to say about this because it's just going up again. Now, David Dick has also been one who's been very vocal and talking about how the share price often bears no resemblance to what the fundamentals are. And when this stock fell from $15 to $8, that was a very good example of it because this is the same company that was at $15 and is now went down to $8, is now back up at $12. So sometimes these valuations really can be misleading. So it's really a matter of clearly understanding behavioural psychology, which I'm going to talk a bit about later on with Charlie Munger. But it really is very important to follow the price and keep an eye on it because the price never lies. And that's the main thing. So fundamentals can be fundamentals, but behaviour is a totally different thing and how we perceive those. So we love ticker data and it's going higher. It yields quite well. It's going up, and all the things are nice about this stock. Trend intensity rating of 10. Okay, the next one I want to go through, the last one I want to go through, the little stock out of my ASX 200, but it's performed very well, and I quite like what's happening here at the moment. And if you're getting excited about the stock market as I am, this may be a stock you want to look at. Data 3. For those of you who like a bit of tech and like a bit of momentum, this could be the one for you. I know it's gone up a long way, but remember, trends often exceed on the upside and they often exceed on the downside. So this has had a big consolidation for a few years across here below about 690. It broke through, it's just consolidated again, and we've got some very good support through here at around about $687, and now it's broken higher again, so it looks like it may well be on a trend again. And you can see the volume, there's a little bit of wow there, which is fantastic, and the momentum index is just starting to get going. So that's one you should watch there. Again, with all these things, you must, they look good, but you've always got to make sure you have protection in place and your stops in place, just in case things go a little bit wrong. What are you prepared to lose in any one trade? That's where your stop goes. Okay, so that's data 3, and that's what that's doing at the moment. So, there's some plenty good stocks there, and some of those prospects that I showed you before are looking very good, and we should keep an eye on them because there's plenty of opportunities out there. Okay, now I want to get into trading tactics here. I want to talk a little bit about Charlie Munger. Now, Jonathan Shapiro, I'm just going to go across to trading tactics here for a second. Okay, so if I just go down here. Okay. Jonathan Shapiro wrote an article in the Weekend Financial Review this week, what Charlie Munger taught me about life. I just want to talk a little bit about it because I go through this quite a lot. There are processes and there's behaviour and there's us. So we need to talk a bit about what actually happens. So when you go to Omaha, I'm just going to read this out a little bit for you. I don't want to read too much, but it's very important what he says here. So Jonathan Shapiro has been there twice now, okay? The experience was one I will never forget. Not because I picked up some tips on how to invest like the best, because I didn't. Rather, I appreciated how Buffett and Munger have melded their passion for picking stocks into a framework for being smarter, more worldly, better at making decisions, and more content with themselves and their lot in life. If you're not happy with yourself, it's highly unlikely you're going to trade successfully. That's the bottom line, is what they're saying. These guys are happy, and if you can see the pictures there, they both look like very happy chaps, and they probably are because they make a lot of money, and that's how they do it. So while Munger is best known as an astute investor, he was also a philosopher and a social scientist. In a quest to avoid his own mental biases, he immersed himself in the field of behavioural psychology. This is what we're doing. Okay, his insights range from the power of incentives to our tendency to ignore faults in things we like while ignoring virtues in things we don't, and how an aversion to loss outweighs the satisfaction of gains. Others on the list are tendencies to make relative judgments rather than absolute ones, to react in extreme ways when stressed, and rush to apply things we've learnt, to follow the orders of authoritative figures and the actions of those around us, and to distort the facts until we can bear them. Overcoming these biases allows us to make better decisions. Now, I always go on about biases and expectations, and these are key when you're trading because the biases affect how we trade all the time, and we repeat those biases often often all the time, unless we understand them and know what they are. And there are plenty of them out there, and I've repeated them a lot. And you can go to my blog site and search up biases, and you'll see a whole string of 20 of them that a lot of us have, and we need to eradicate them to trade. To finish off here, Munger was also adamant that investing and life were not about being better than others or getting richer than others, but seeking contentment within yourself. If you're comfortably rich and someone else is getting rich faster than you, by, for example, investing in risking stocks, so what? Doesn't matter. Someone will always be getting richer faster than you. This is not a tragedy. Okay, so don't worry about what the guy's doing next door. His scourge was envy, and Munger was ruthless in eliminating toxic influences in his life that were not worth his time and energy. This gave him total immunity to the FOMO, fear of missing out, that has driven so many investors to distraction. So many people come to me who want to, why do you only cover these stocks? Why do you only trade these stocks? Because that's all I need. I don't need to chase my tail or look, the grass is always green on the other side. It's important to be content with what you've got and not worry about what everything else is going on there. Another of Munger's traits, and one that he said made him a better investor, was his endless pursuit of knowledge. Munger believed we tend to overstate our intelligence. But he also believed that if we are curious about the world around us and passionate in trying to understand why things are happening, we can attain valuable wisdom. He encouraged his followers to read as much as what they could and take the time out to think. Much of Munger's wisdom related to living a contented life. One of his commonly cited snippets of advice is to have low expectations, is that word again, that can easily be exceeded. Okay, so if you have expectations up here, you can only set yourself up for disappointment. If they're down here, you can set yourself up for happiness and glory, I guess, if you want to call it that way. When I realised my 2 trips, Jonathan Shapiro, to Omaha, was that Munger was not going to tell people how to be better investors. We all go there looking for stock tips. Well, that's not what you're going to get. And he certainly wasn't going to tell them how to make more money. He was going to tell you what he thought and how you should think, and how you should be if you want to be a better investor. And that's what they talk about. So not the stock picks, but about yourself. Munger and Buffett had no secrets. There is no secret to the stock market. There's no secret. There's no secret strategy. There's no secret message. There's nothing there. There's only common sense, discipline, and again, expectations and biases, all these things that need to be managed carefully. It was okay. So if there was a secret to investing success, it is not about replicating a process or a style. So I have a style which I show you on Stockradar, but really it's a style, and I talk about the things that surround it, the discipline, the expectations, the biases, all the things that are common to successful investors. Okay, whether it be Peter Lynch or Warren Buffett, anybody like that, they all have this commonality of how they approach things. So if there is a secret to investing success, it's not about replicating a process or style or searching for securities with certain characteristics, but it is a deeply personal pursuit of self-improvement, knowledge and humility. As Munger said, the game of life is the game of everlasting learning. At least it is if you want to win. So that's really a bit about, I try and instill this sort of knowledge in people that they really need to be content with themselves. They need to understand themselves, how they behave, if they're going to interact with the market successfully. And it's a really, really important thing. So the smiling faces there, whether you like how they do it, whatever it is a common attribute that we have towards successful investors. Okay, so that's really that's the trading tactics. That's really all I want to talk to you about today. I hope it's sort of useful for you because it is important. And I think, now as we come up to the end of the year, we look at the new year for new things and New Year's resolutions, and trying to make yourself a better person is always something that is always useful. And I think as an investor, if you can do that and be contented and be happy with what you've got and not kind of trace your tail all the time and get anxious and all that sort of thing, then you'll find you will be far better investors and you'll probably start to make a lot of money. So, there's plenty more stocks on the radar for Stockradar, plenty more coming up because we've only got 18 stock picks out of 161, but you can see the ones we've got are doing quite well. So check Stockradar's Trading Centre for a few other ones I've got there. I'll probably come up with a few other ones for you next week you can have a look at. So in the meantime, stay safe, heed your stops, respect your trends, and I'll see you all next week. So hope you have a happy week this week. It's exciting what's happening on the stock market, so I look forward to seeing you all next week and having another chat to you. Okay, thanks very much.